So just as we were talking about yesterday in our video on YouTube, we were looking at this potential bounce after the market dip yesterday. It was not looking good in quantum. Rigetti stock was getting hammered. We saw it selling off. We saw QBTS getting hammered as well. And while we have long-term positions on the quantum computing market, we also have some shorts, and we've been pretty adamant about the shorting of the Rigetti stock, even though we have some long-term positions, because ultimately quantum ran pretty high and we saw some sell-offs kick in, and we're simply capitalizing on some of those profits. Now, I didn't expect it to drop this much. In fact, our puts that we opened up on Rigetti were at, if I recall, $35 a share, and they've sold now. It's down to $26 a share, which has been nice. But even so, we're looking at what could be, if you're getting ready to open up, or you're anticipating a full recovery here, just like we expected, this V-shaped pattern, this recovery in the market to continue back up. And we did see that we're still holding below a lot of moving averages. It did not look good leading up to the market open. We saw a lot of the market selling down, holding below this EMA, really getting pushed down. And then we saw the recovery at market open. You see some of the stocks push up. A lot of quantum stocks really recovered, along with a lot of data center companies. The AI companies had some nice recoveries, shooting back up into these ranges. But even so, just even though we're looking at, okay, we're seeing recovery, get ready, because in this volatility, again, not looking good yesterday, now we're looking at quantum in a light that could be potentially a continuation of what we've seen. And maybe we get a full recovery. Maybe that's the case. But again, over the last couple of weeks that we see that push down, it's not looking so good in the quantum market. Now, when you're looking at QBTS, very similar situation. QBTS also had some momentum that was just very heavy down. We see this recovery is how most quantum stocks look today. They were down to $20 a share, shot back up to $24 a share, which was a recovery of about 17%, and they started to sell back down. When we were talking about this morning, we're in our StockMate daily live trading session. If you guys ever want to tune on in, it's a second link in the description. While we do look at these positions and we have shorts open in some of the quantum market, it's still not favorable to see the markets tank. Like, I would hope for most people that are bullish in the shorter term, that have been in positions, that we do see some of the markets recover in the quantum market, because ultimately when you're looking at the QBTS movement, you're looking at IONQ with a similar movement this morning as well. We saw them shoot up. You're still looking at what is downward pressure over the last few days. So as we're approaching, and we see a lot of them jump back up into this moving average, you're looking at potential reversals kicking in. But be ready here towards next week as we get into it, because we'll have some better ideas of overall direction. Now, despite downward pressure and now what is, a pullback in the markets, we would love to see, things continue back up. And again, I did add to some of our longer term positions yesterday for bullish. But when you think about the bullish sentiment, you also got to know, just as quickly, like, this is not the time in the market, especially after last couple days, this is not the time in the market to do any margin. It's not the time in the market to use extra leverage at this time. In fact, the last week, even leading up to the sell-offs we saw here, even though we were hedging our positions to keep our portfolio steady here, which I don't always recommend, like, that's more advanced. Most beginners shouldn't be shorting. In fact, if you're looking at shorting positions during a downturn like this, you really don't want to see a V-shaped pattern. You can get wiped out pretty easily. So that means keeping positions small. In our shorter term trades, when we're entering any trades, there's a criteria that has to be met. There's a trading plan that we enter that looks something like, here's where our margin for profit looks like. It's much greater than that of our risk. We opened up somewhere around 60 contracts on Rigetti, and we were still kind of leveraging a couple $1,000s in shorts, but we didn't have to do that. We did it because we were stabilizing our position. It's not because we're trying to bet against the market in any way, although we're just basically keeping our portfolio steady. Because when you're looking at market downturns, you're looking at a sell-off like we saw, we could see just as quickly the market recover. And in that case, you don't want to be betting against the market, especially when you're looking at, tech, the way it's gone. Most earnings have been good. The downward pressure continues. You see shorting opportunities, especially at pre-market open, when we see those big moves happen and we look for those opportunities, but you still have to respect what the market's telling us. And right now we see a nice green recovery. If it can just sustain into next week, then we could have a better week heading into mid-November. Most analysts say that this is kind of a pullback in a greater trend. That's good. We're able to actually shield our portfolio in a way by stabilizing some of the positions, but we still have to be ready to not do any leverage, not over trade at this moment, and keep the trades light if possible. So I would urge you guys, again, have a plan in the short term. Very important. I don't urge anybody in the quantum market especially to take any big risks at this time. And I would encourage you, again, if you are just getting started, have the patience to wait and identify direction more before getting into a position. We see this downtrend on IONQ. You're still seeing that moving average where it still hasn't fully broken above. We could get some rejection here and see some of the markets continue down in the quantum market. And so if that's the case, you don't want to be caught buying that dip and not have a plan in place and not have a clear stop that is going to manage risk much smaller than the amount of profit you're going for. So it's very important to have that plan in place. And that's really just it. One of the best things to do at this time is to start strategizing and put together a plan for any of the investments you're in. And if you've had any losses or any gains during this time by playing some of the downside that we've been talking about, then you might want to write those things down. So during these critical moments, you have some good lessons for you. It's about 60 plus lessons on fundamental technical analysis and how to invest in AI, quantum, space, and tech stocks in the stock market. And every day, Monday through Friday, we're there live if you want to tune on in. It's early in the morning if you're on the Pacific Coast, but you still get the market live sessions every morning. It's the second link in the description below. Been to some conferences recently, and I've seen a lot of innovation. Looks great for the long term, but the short term and the corrections we're seeing seem to be kind of like an unpaid bill that was bound to happen. What's your perspective on it? Do you see it the same way? Let me know in the comment section below. If I earned your thumbs up, hit the like button. Do consider subscribing. I'll see you in the next one. Take care.